Can you define firstly what a large cap miner is?
Yes. So a large cap miner tends to be one that's simply worth a market cap of, I would say, 5 to 10 billion or above. They often tend to be diversified miners. In the gold market, they tend to be a miner with lots and lots of gold mines all over the world. In the regular market, they would mine lots of different metals. So Rio Tinto is a large cap miner. Glengor is a large cap miner. Anglo American is a large cap miner. Large integrated global operations for many metals or many mines that span generations. These companies tend to last a very long time as well.
So then we've got the opposite end of the spectrum, we've got the micro cap miners. So what are they defined as? What sort of size are we looking at there?
Earlier, we discussed the fact that there's a difference between explorers and miners. The micro caps are usually sub 100 million, and they are guys who are looking for or developing mines most of the time. There are very few sub $100 million market cap miners that are actually producing. There are a few, but they tend to be very small scale. So they're producing less than 100,000 ounces a year if we're talking about gold. But often those are the companies, the entrepreneurial guys who have seen a discrepancy in the demand and supply of metals, and they've gone out there and are looking for or have found metals and are trying to develop an economic deposit. So when you find gold, for example, because it's the easiest example, you dig out a little bit, you say, okay, there is gold here. But then you have to drill lots more holes to figure out how much gold is there. And then you have to do a lot of testing to figure out how you get it out of the ground, how you process it, how much recovery you can get, and all that stuff. That all takes time and money. And the junior miners, the microcap miners, the sub 100 million pound miners are usually the guys engaged in that process.
Because it's highly speculative, I guess they're looking to find that wonderful little deposit that they've come across and then be taken over, aren't they?
Many of them do want to be taken over. Increasingly, though, the majors who used to buy the microcap miners have realized that they can wait a lot longer to buy them out. Right. It's actually more economic than to do the exploration themselves, and or to so they let the junior miners make the mistakes. They let the 1 in 10 deposits that have been found that actually turn into economic mines. They let that risk be taken on the back of the junior mining industry, and they buy it when they know for sure. They pay a bit more for it, don't get me wrong, but they take less risk, and up until recently that has worked for them, or in the last 10 or 20 years that has been more the way it has been than in the past when they would buy someone out as soon as they found a deposit.
You've been quoted before as saying that it's the medium sort of size miners who represent the best value. Would you stick by that?
I would. The reality is there's a whole lot of risk when guys are going out just to look for mines. Now you can make a huge amount of reward from taking a patch of ground in the middle of nowhere and finding gold or indications of gold on it. 10 times your money is extraordinarily common. But if you're making 10 times your money, you have to assume that there's a potential that 9 out of 10 of those times you're going to lose all your money and they're going to find nothing. And that being the case, that's a very risky investment. And while some people employ geoscientists to reduce that risk, even the best, like, you've got to assume that they've got geoscientists that are looking for this. They've got smart guys looking for those metals and minerals in the ground. But they have to kiss a lot of frogs, look at a lot of rocks to find it, and it's a trial and error thing. I prefer to invest when they found an initial rock. So they've got a couple of drill holes in there, and I can apply some scientific methods and economic methods. So I've missed the first big wow bump in the price, but I can apply practical methodology to know what it's going to take to get to the next levels. And often there's at least another five baggers in there. So I can still go up 5 times in that process. I've missed the huge initial jump, but I've missed all that risk as well.
It's interesting because we were talking earlier on about some of these mining conferences that the retail public can go to as well. We talked about one in New Orleans, and London, and all around the world. And the retail investors love finding those little junior stocks, don't they? That they might be able to buy for 2p and it goes up. They think it's going to go to 100, and maybe now and again, once in a blue moon, that actually happens. But the rest of the time, they will lose their money, don't they?
Yeah, but we were talking earlier about the fact that sentiment drives the market, and gold especially. There's something called a gold rush mentality, and it was based on people in the turn of the century who went looking for gold in the New World, and they loved it. There's a rush of excitement in finding money, and gold is money. So people have gone out there, and there's something about buying that new exploration guide that makes them feel like that gold mine, like they could find money. And I think that sentiment, that rush of excitement, is what gets a lot of retail investors. They know they could lose their money. They're not stupid people, but they want the excitement. And the fact that they could make 10 times their money makes them take the risk. It's the same as buying, well, it's a little bit smarter than buying a lottery ticket, but it's the same. Why do we all buy lottery tickets? Because we like the idea of making lots of money from a small investment.
But the best advice surely is to buy medium-sized businesses like you do, or go into a fund where you've got diversification, much like yours.
Those are wise investments that you can stick in your pension fund, and they're great. And the diversification and the added value of a knowledgeable manager who does lots of research is obviously going to be the better investment. But having a couple of those minnows in your portfolio, well, you might just enjoy it.
Yeah, that's fair enough. Speculation with some money that you can afford to lose.
Exactly.
Yeah.